Hey, so I want to take a look at Palantir. Ticker symbol is PLTR. The last time we looked at this company was on June 5th. Let me just share the tracker we have. So right here, we have it marked red, meaning it was near a resistance point, so I wasn't interested in buying it at that price. So we'll, of course, see what the price is today. We had a buy point marked at $7 with resistance at 13, 19, and 28. 28 being the figure that we felt was like the true resistance, but we did have some, I have to imagine, slight resistance points at the 13 and 19. Uh, our note that we left ourselves was steep uptrend for the past month. So we'll see if that's still the case, making it 2 months now. Previously in consolidation between 7 and 10 for the past year since May of 22. So that makes sense why I had that buy point at 7. Um, so yeah, let's go over some news first. There's quite a bit of it. So let's just dive into that, and then we'll wrap up with the technical analysis to see if any of those figures change for us. So right off the bat, we found someone who did an intrinsic calculation using the free cash flow method, which you can see down here in the bottom left. Um, and I guess before we analyze some of these pieces, which we have a SWOT analysis on the right, we're going to start off with, based on this free cash flow method, which again is down here in the bottom left, they're coming up with this fair value of about $29 to $30. And at the time, it was trading at 15. I think today it's at about 16, somewhere. So it's somewhere close to the current price, even though this was about a month ago. But this fair value, again, I'm not going to knock on that fair value yet. Again, I want to look at the technicals, and I definitely want to see their next financial statements, which should come out soon. I think we'll touch on it in this news section. But again, we did have resistance, a boldened resistance point at 28. So 29 seems to be within reason for today, I guess. Again, we'll look into it. But the one thing, and I have a couple figures here highlighted in the free cash flow forecast, is that I don't think it should be that high. If they were using this free cash flow forecast to account for that $29, $30 valuation, I just think it's misleading, because if we look at the, what is it, levered FCF, so free cash flow, it jumps too drastically, too fast. So in these first 2 years, in 23 and 24, you have 6 analysts, and it averages out to, you'd make $460 million in 23, then it goes up to $600 million in 2024, and then all of a sudden the analysts drop down to 2 and then 1. And so what happens here is the average now of these more accurate figures that they're putting out here, it all of a sudden jumps tremendously. So clearly analyst 2, based on whatever analyst was covering it in 2026 and 27, he clearly was pushing this up higher, because to go in 2025 from a $750 million free cash flow to all of a sudden 1.87 billion, I mean, that's more than double the prior year. I haven't seen anything, and again, we have a fair amount of news to cover. I have not seen anything saying that in 2025 things are just going to go through the roof for this company in terms of money. Like, so that's why I'm very skeptical about their 29. I'm not sure how far I would drop it down, but I'm pointing that out because, yeah, I don't think that gives this company a fair shake. You're not just going to randomly double like that. And if you are, it's going to be in the earlier years, not in this middle years, unless some big news thing happens, and I haven't heard anything. So if you have, feel free to share it. And yeah, as we're going through this, if you have any questions or want to add any insights, feel free to do that too. So then on the right, we have the SWOT analysis. We don't really need to go over anything there. Yeah, I guess I'll point out how the weaknesses, shareholders have been diluted in the past year. I know we've mentioned that previously. So I'm hoping that's slowed down, and that's why it's kind of rallying right now, is we're seeing that pull back. I have to imagine that's the case, but once we get into the actual financial statements, we can kind of confirm that, hopefully. So continuing on here, Tech Giant achieved GAAP net income profitability for the second consecutive quarter. So that was a big thing, and we were contributing that to these stock options that the company was doing so much of, which was leading to their expenses being high. And well, I have to imagine next time we see their financials, we're going to see that get pulled back some, which is good for this company. But overall, it seems like they're moving to profitability. It's also boasted an impressive adjusted operating margin of 24%. The 36% margin on its free cash flow further solidifies its financial strength. Again, very good there. Revenue improved by 18% from prior year. That's the only hiccup for this one. Not that 18% revenue improvement is bad. It's clearly a good number. It's just for this company being as small as it is, and with so much opportunity out there, to see it only grow 18% in a full year, it's a little underwhelming. I just would have thought it'd be if that figure was in the 30s or 40s, that would make more sense to me. So to see it at 18, it is a surprise to see it that low. Continuing on though, Palantir's growth momentum is the 39% sequential increase in U.S. commercial revenue and a 50% bump in year-over-year customer count. So Palantir does a lot of government work, and they're trying to pivot into the commercial side of it. So non-government, we can just simplify it. And I guess that piece is growing pretty quickly, which is good. Anytime we can see a lot of growth, that's good. And then total customer count went up 50%. Again, because it's trying to diversify and get more non-government customers. Its recent announcement of a $463 million contract with the U.S. Special Forces. Again, that's a government thing. And I think this is another thing. I mean, don't get me wrong, that's a ton of money, definitely for a company like this, but that's the size of a big contract to them. And that's just one. Let's just keep going. So it closed out its last quarter with 64 deals. So again, I just feel like this company has a lot of opportunity in front of it, but we'll keep going into this, and we'll get a better understanding of why there aren't as many deals happening, because apparently 64 is a lot. That's why it's being mentioned here. Closing of nearly $400 million in new contracts, a 60% year-over-year improvement. 22 deals were worth at least $5 million, and 8 surpassing $10 million. Cool. They're gaining customers, and the customers are paying more. Great. So one analyst, Raymond James, downgraded the company to outperform from strong buy. So overall, they're still saying this is a good company to pick up. It's just strong buy is, a 5 out of 5. Outperform is a 4 out of 5. That's how I'm reading this. It changed its price target to 18 from 15, so they actually increased it. Even though they downgraded it, I think it's just because where the price is today compared to their updated price target, it's not, it's still better than where it is today, but it's not like it was. They cited the stock's premium valuation after a strong run since its first quarter print, but said they remain enthusiastic about Palantir's positioning in AI. Moving on, 12 Wall Street analysts have a median price target on Palantir stock of $8.25. So that's pretty low. That's pretty low. And I guess we might as well put this out there. So right now it's trading at $16. Okay, so $16. And 12 analysts, I don't know how many are covering this, but 12 of them have a price target of $8, indicating a 41% drop from today's levels. And then we have a couple companies here. So Goldman Sachs has $10, and of course keep in mind the dates here. It's a little bit dated. Maybe things have changed since this article, which was June 27th. Citigroup went as far as $6. But then, like we just saw in the previous article, this Raymond James and Bank of America have price targets of $18. So, but then again, it's 12 versus 2. Yeah, even if we were to average them, you'd get like 13. So we're still above that level. And then just to wrap this one up, Palantir increased its earnings guidance from profitable for all of 2023 to profitable every quarter in 2023. So I guess that's a little bit of a step forward. And it's a positive thing. And then last thing on this page is the price to sales ratio. You can see it. I can't pull up an exact figure, but clearly it found some stability here in the first quarter, early second quarter, at around like $9 or 9 times price to sales, and now all of a sudden we're at 15. So obviously we would like that to pull back to maybe a 9 or a 10 even, but clearly it's way over where it was. Something to just keep in mind. Next, we have the company recently launched a large language model called an artificial intelligence platform, which is AIP, which enables the company to deliver an interactive chatbot experience to its clients while helping them make informed decisions. So this is one of the things they offer. I think we'll mention it later how they do software security, but they're also, providing this type of. I'm not sure which one, if they're even like items or if one has the dominance. Again, once we get the financial statements, we'll be able to paint a better picture there. In the first quarter, revenues from the government clients rose by 18% year over year to $525 million. So pretty good, $2 billion a year in government. Also on track to reduce its excessive dependence on the government sector. Commercial customer count was up by nearly 50% year over year to 280 at the end of the first quarter. So again, there just seems to be a lot of growth here. As long as they're being successful with their current 280 customers, they could easily double that. And it would just be 500 customers. That's insane to me. This company has a lot of potential. Faster than the 41% year-over-year growth rate seen in total customer count. Commercial customers accounted for 45% of the company's first quarter revenue. So it is pretty split between that aspect, government and non-government. The company trades at 14.9 times sales, which is dramatically higher than the software industry's price to sales of 2.4. And in that previous chart, we were looking for price to sales of like 8 or 9. Even that would be 4 times the industry. But, there's unique cases all the time. This next one goes into a magic number. So Palantir expanded its partnership with Jacobs Solution. Palantir also announced a partnership with Panasonic, which is the subsidiary of North America, that Panasonic. Quarterly results, total revenue grew by 525. We mentioned that before. This author here, you can see at the top, the best strategy is to wait for Palantir to pull back to $12 before hitting the buy button. Now, we'll go into technicals and we'll make a decision ourselves, but let's keep that in mind. $12, see how that lines up. And again, last time we looked at it, we had a buy point of 7. So we'll see if we should elevate it to 12. We'll see. This next one, so they sponsored this Ukrainian tennis star, Elina. This is the first sponsorship of this kind for Palantir. They'll also support the Elina Svitolina Foundation. So I'm not sure how they're going to handle that in accounting, just because I guess it really wouldn't matter to the business aspect, but all I was thinking, it would be more for taxes, I suppose, because if the sponsorship is going to the foundation, are they going to count it 50-50 as marketing plus donations, or 100 to marketing? It's just happened to be donate. Just curious, but no impact to this company. Next we have Palantir Software is... Okay, so he's going into a problem for it. They're saying it's a problem that Palantir Software isn't cheap. A 1-month subscription to Palantir Foundry, that its flagship product, costs $100,000 per month. That is insane. I mean, if it's worth it, great. They're making tons of money. And then they say an additional unit would be another $50,000 per month. So obviously the beauty of this is with those, 280 customers that they have, if those ones are very happy with the product and it's doing what they expected, that is every month they're getting like that $2 million, or what would that be, like $28 million every month from that. And if any of those have additional seats, which I'm sure they do, you just add another 50% onto it. And that's monthly. And if they just get a new one and they're satisfied, they have a very high ceiling. So it goes on with only 280 total customers using Palantir. It hasn't even scratched the surface of signing on customers with the pocket books to use the platform. I'd be very curious to see who those 280 customers are. Not that it would really impact anything. It's just, if they're working with Amazon, that's a good sign, because that means they're working with the best. So it hopefully will trickle down. Maybe they'd have to reduce the price, but as they expand to 1,000 customers and they drop it to like 90,000 per month, I mean, they'd still be making a ton of money. So to wrap this one up, investors would usually expect to pay a price of 20 times earnings for a mature company. So does that make Palantir a decent buy? He says, I think so. Again, authors up at the top. The key is its high margin subscription software business. We mentioned that earlier. A mature software company like Adobe has traded around 50 times earnings over the past 7 years. In reality, a valuation of 40 to 50 times earnings should be expected. The thing is, it's hard to judge this one by price to earnings because it's only recently becoming profitable, but it's something to keep in mind, that we should be comfortable with this one trading at about 40 to 50 times, if not higher, to be honest, like a 60 or 70. We should be willing to take that step because of the high growth and the fact that we have a company like Adobe, a very strong company, a mature company, trading at 50 times. So we kind of would expect Palantir to trade above that and be okay with it. And then here we have another price to sales ratio, which I'm not sure how much different it is, but here it is now at about 14 times sales, where I think the last one was at like 15. Here we have, they're approaching their next earnings report. The company is expected to report earnings per share of 5 cents, which would be up 600% from the prior year, calling for quarterly earnings of about 530 million, which would be up 12%. So we'll see how that lines up. The full year, they're expecting 21 cents per share and revenue of $2.2 billion. Again, we'll hopefully circle back to this. We'll know it's in this this video to refer back to. Those earnings per share and revenue, those would be up 250% per share. And for revenue, only 15%. Again, I don't like how low that is for how much potential this has. Again, not that 15% is low, that's very good. It's just a company of their size with their current customer base, revenue base. I just would have thought that would be like in the 30s or higher, like the 40s. So a little surprising. And here it mentions how the forward PE ratio is at 72 when the industry average is normally at 23. So that kind of seems right. Going off of what we mentioned earlier, that does kind of add up. Next earnings are scheduled to be released on August 8th. And here they're repeating it again. This person is saying that they would be willing to buy in at 25, 30, or even 40 times earnings. I'm saying like 70. Like I'm saying 70 or 80. So if we could catch it at like 40, I think that's probably a very good deal for anyone. Here we have a partnership, Palantir and Air Matrix, which is a trailblazer in airspace infrastructure technology, announced a strategic partnership to accelerate and scale its drone operations by leveraging Palantir Foundry through the Foundry for Builders program. This will provide Air Matrix's clients with airspace security. So there goes the security aspect. But they're clearly using this Foundry, which we mentioned was the flagship. So I wonder how many seats is how they label it, that this company made a deal for. This is the last thing before the technical analysis. So last thing, today announced, and again, mind the date, today announced it has expanded its partnerships with Carahsoft technology. This is the trusted government IT solutions provider. Carahsoft will serve as a public sector distributor for Palantir, making the company's Apollo platform available to the public sector through Carahsoft's reseller partners. So this is just a distributor. I think I mentioned that. Yeah, we'll serve as a public sector distributor for Palantir. So hopefully they made a good deal. I think the article continued on to say that they've worked with them in the past. So this is just more of that. So yeah, let's look at the technicals. So let's zoom in to start. Last time we looked at this was June, 5th? So that was probably a Monday. And so it was probably trading about 14. We have 15. So it was somewhere here. Somewhere in here at 15. Crazy. Okay. We had a buy point marked down here at 7 because, again, for the longest time, it was trading between about $7 and $10. We had this one little flare above there in August of 22, but for the most part, it really was trading between $7 and like $9. And then all of a sudden in May, which we mentioned, steep uptrend for the past month. That has kind of leveled off now. It's still growing, considering back here we said 15, and over the past month it's kind of gone up and down, but here we are, it's actually up an additional $1. So we'll update that from 15 to now 16. If I was going to buy this one, I need to zoom out. So this is the entire company's history as a publicly traded company. There's not really much of a support line, not until 7. I mean, 7 is still a real support line. We have $9 marked out here because it acted as some support for like a month back in July of 22. But then in terms of support, like, there really isn't much. So what I've seen with other companies when they're in this type of spot, again, just looking at how quickly it went up and how quickly it went down, there's really nothing stopping this company until it gets to about $22. this one, of course, we've also seen a pattern where it kind of fills in the gap, and so that's kind of the preferred method. Is that yes, this one will continue to raise its value over time to 17, 18, but unlike in the past, it's not going to go from 13 to 22 in a month. It's going to take maybe 6 months, 7 months, where it has this up and down pattern like we're seeing right now, how it's kind of trading sideways. And, it'll just kind of gradually build up. The one thing that I do want to try to see is if there's any sort of trend. So like here was one thing that I was considering, is that we could say those are the bottoms and we add in another one. The thing is, that's like it's so above that range, and so I guess it's let's draw another trend line in here where we take this one and we do something like that. We'll make this one an orange. We'll add in another trend line trying to mirror this, something like that. Now that gold trend line, that clearly can't last for I mean, technically it's kind of been in place since May. That's been pretty accurate. I'm trying to see if that's that looks pretty parallel. So we could kind of do a couple things here. So there's the most recent trend, which is in gold, which if we give priority to that, which we're not going to do because it's the smallest, I don't know if that's wise or not, but because it has the least amount of time behind it, that's why it's getting the smallest rating. But then again, we'll keep these in for now. So if we went with the gold uptrend, we're kind of at the bottom of it. And so we have a lot of room to reach the top. That's one way to look at it. We also now have this purple uptrend, which if that's the case, which is the more conservative route, then we are so far overshooting what the price of this stock should be. It's way overvalued. And then of course we have our horizontal lines, which goes back to how it was trading between about $7 to $10 since May of 22. So we have those three factors in there. And so I guess it really just boils down to, where would I buy this one? Again, looking at the gold line, I understand the potential with this one. It's just, I mean, it is a pretty cheap value. Oh man, we're gonna, okay, so I guess we'll start off by this. One buy point would be $7. We could argue $9 or $10. I would say, if I had to pick 3 points, I would pick 7, 9, and then this week is 16. So we have 7, 9, and 16. So 7 is obviously that green line. 9 is the bottom of the purple uptrend, and then 16 is the bottom of the gold uptrend. The figure that I'm most interested in, I'd be willing to pick this one up at 9. I need to see their next financial statements to like truly make a decision. I don't know. It just popped off so quick. We'll just keep following it. Again, if you have a different opinion, by all means, let me know, and maybe that'll influence me the next time we circle back to this. In terms of resistance, so we had 13, which is this little red line. We didn't think that would be much of a problem, and it wasn't. So at this point, I'm going to remove 13. Next was 19. 19 was mainly referring to this little period here in December of 21 where it dipped below 19 and for some reason couldn't get above. It's currently at 16. We'll leave 19 in for now. And then 28 is the real thick red line. When it gets to 28, it held up there for a month. The one time it went above 28, it took about a month to pull back, but it pulled back. And then we could argue it tried another 1, 2, 3, maybe even 4 times. We could say it tried to it got close to 28, but ultimately got rejected. So 28 is very firm. Yeah, so right now, I mean, based on the buy point that I have and the resistance point that I have, I'm going to give this one a fair value. So I'm going to update this from red to blue. If you're more adventurous than me, pick it up. But I'm going to wait for it to pull back to the low teens. You know, if it pulled back to like 12, yeah, I'd probably reach out to get it. That's pretty close to my 9, and it's a very cheap stock. As far as our notes, steep uptrend, that is still in play. That's been going on since May. Steep uptrend since May of 2023. Previously in consolidation between 7 and 10. For past year since May of 22. Anything else? We'll leave it at that. So yeah, that wraps this up. So just to have a quick summary here, we have Palantir updated to a fair value. Again, because we have our buy points of 7, 9, and 16, with 9 being what we're eyeing, and then resistance at 19 and 28, with 28 being what I think is firm resistance. We're kind of in the middle. And if anything, we do have a buy point here at 16. I've been in this situation with a couple other stocks where I was right at that spot where I can make the argument to buy or sell, and it's been better to buy. I will mention that. Again, every company's different, but just something I'm mentally thinking about. So we'll see what happens over the next month with this one. And then to summarize the note, it's been in a steep uptrend since May of 2023. So close to 2 months it's been like that. And it's at the bottom of that uptrend. So again, something to think about. Previously, it was consolidating between 7 and 10 for the past year since May of 22. I guess we can actually remove that because we're so far above. We're going to take that out because clearly that consolidation period is gone. It's been gone since May. So we took that out. Oh, why does it keep doing that? So here we go. That wraps this one up. So yeah, if you have any comments or want to add any insights that maybe you think I missed, or if you saw something over the past month that you want to share, by all means let me know. I'd be happy to read it. Otherwise, if you have questions, feel free to ask that. I'll do my best to answer it. Other than that, please like, subscribe, and I'll see you on the next one. Bye.